Hi, Kelly Fitzmaurice here with the K Grant Group,
And I'm Hannah Canaletti with the K Grant Group.
and we are here today to provide you with a market update.
Let's get into it. I'm going to share my screen with you guys as always so we can go through some slides with you.
We have some fun slides.
We do. Okay, so first of all, we want to talk about growth. We talk about growth in this area a lot, but we wanted to dive back into it because we have some really good data on kind of where Arizona ranks with other states.
Yes, so what we're seeing here on this slide is looking at 2020 for Arizona and 2022, and also the consensus report for 2023. So we are still seeing a lot of growth and a lot of people moving into Arizona. We are ranked number 7 and have been consistently for the past couple of years.
And then piggybacking off of that, when we look at this next slide, it also talks about magnet states. So when you're talking about the top inbound states, Arizona is ranked number 2, just behind South Carolina. So we kind of continue to be a magnet, not only for jobs and infrastructure and economic growth, but people obviously as well.
Yes. And so when looking at the outbound states, you can see where a lot of people are moving from. So we do have a lot of people that are coming from Illinois, California, and Washington. I feel like we see that all the time. California is probably the biggest state that is moving to Arizona. No big news there.
Yeah, right. I've been seeing that for a while.
Yes.
But we also wanted to touch on the employment centers. So we have talked about the semiconductor plant that's going in. We've talked about the Intel campus, but this is a great visual to show you where those hotspots are. So if you are coming from more of an investment perspective, or you want to purchase a property out here, use it a portion of the year, and then have it be a great investment, those spots that are highlighted in dark purple are going to be the highest amount of jobs and the most amount of employees as well in those pockets.
Absolutely. And we have a lot of new highway systems that are going in. They've already been started, but they're also going to be connecting. So it's easier to get around the valley, which is really important if you can get somewhere in 20 to 30 minutes. Proximity to your job and also proximity to get back home.
Yeah, so this pocket right here, this is where the Taiwanese semiconductor plant is going in, and this down here in Chandler is the Intel campus. I know those are a couple of big ones, but obviously all of these other dark purple areas are great areas for investment as well. Speaking of pockets of the cities that are the best for investment, Kelly.
Yeah, we have definitely, these are going to be our major 17 right here. And as you can see, we are already flipping back into seller markets, and this just keeps on increasing. But looking out over here, some of the other seller markets, you have Anthem, you have Apache Junction. There's so much going on in Apache Junction. Yep. I'm actually going to be out doing a hike there this weekend.
Yeah.
But El Mirage, Lavine, Sun Lakes is actually all 55 plus community, and that's starting to see an uptick. Now, the ones that you're going to see that are still in the buyer's market down here, when we're looking at Queen Creek, Buckeye, and Maricopa, you still have a lot of building going on out there. So wherever we have new builds going on and resell, those tend to be in a buyer's market versus being in a balanced market. And some of this right here as well.
Yeah, and I kind of wanted to touch on Anthem specifically because going back to these employment centers, Anthem is in this North Phoenix area right just above there. And so you have people that are buying in those areas specifically for that reason. And when we look at these numbers, just so you guys have an idea, 100 is in balance. Anything above 100 is considered a seller market. So when you have Chandler sitting at 195, you have, Anthem at 185 and Apache Junction at 241. Those are very hot seller markets because the demand for those areas just far outweighs the supply that they have right now.
Right. And next week, when we look at the Cromford Report again, we know Cave Creek is going to be back up in that seller's market because it's at 104. And I would say that Paradise Valley is well on its way. Yeah. And Surprise and Goodyear as well.
We also wanted to talk about, again, the Cromford Market Index. We know 100 is balance. Anything above that is a seller market. We do want to highlight we are in essentially a weak seller market. So we are just above balance, but that's not evenly distributed. That is the valley as a whole. So you have those cities like Gilbert and Chandler and Anthem that are really strong seller markets, but overall we are kind of in this weak seller market because supply and demand are moving up together at a much slower pace.
Absolutely. And with our supply, we are seeing that we are having more listings, but the reason our demand is just a little bit halted, it really kind of deals with the interest rates, because whenever we see the interest rates being in the sevens, we see that the demand, everybody's a little bit more sidelined. If we're below that 7% on interest rates, we see the demand starts upticking.
And we saw that all last year. People do not like 7%. When the CPI report came out, and rates went back up to 7, it's hard for buyers, and I think it kind of stifles that demand just a little bit. So because of that, we're not expecting any big, bold movements in price over the next 3 to 6 months, unless there's a huge decline in rates. But for the most part, we're expecting a pretty somewhat balanced, somewhat level price across the next couple months.
Yes.
And you can see that again here. It's a very kind of slow moving line as compared to something like 2022, where you had these very dramatic, drop offs.
Right.
But we're kind of sitting just above balance at this point, moving very flat.
Yes. So you're not going to see too much, as she was saying before, too much with the pricing. You will only see movement in the pricing when the interest rates really kind of goes down. That price is going to go up. And we're going to talk about how we can help you overcome some of the high interest rates and what we can do to help you buy down those rates.
Yeah, so we've talked about this before. We also just wanted, before we get into that, to talk about appreciation. So
yes, absolutely.
This graphic is huge, I think, for people.
So if you notice in this graphic right here, in February 2022, our median house price was at $450. And right now we're sitting at $449,900. So we're basically at an even from 2022. In May of that year, we went way up. People were putting in offers well above list price. There was a lot of cash in the market and interest rates were low. So that kind of was a volatile time in our market. But if you look over here, you can see that this past year, we have not had too much in pricing going down.
Yeah.
It stayed, when we started last year in February, we were really kind of coming out of that correction. And yes, that market correction, and our median house price dropped down to $415, but we're all the way back up to where we were in 2022, and we do not see prices going down.
And I think something really kind of we want to focus on with this slide is there was a bit of turbulence last year entirely based around rates. But if you're looking at the majority of last year from April pretty much onward, there was only about a $10,000 swing in median home price when you think about rates went from 6 to 8%. So it's really not a huge swing when you're thinking about once it hit 6, a lot of buyers were sidelined. Anything after that didn't really cause as much of a decline as you would think, because the bulk of the buyers were already on the sideline at that point. So wanted to touch on that. We're also, again, from February 2022, we're basically right back where we were, slightly ahead. So in February 2022, we were at $286.51 per square foot. Now we're at $294.55 for February so far. So from the peak of the market prior to the crash, quote unquote, or the correction, we're only down 3.7% from the absolute peak. And that was insanity.
Yes. And once again, that's when people were putting offers in, they were going 60 or 100 grand over list price. And that really shot up our prices. So we knew we were going to come down from there and go back to that median house price, which keeps it more affordable, but we're not going to see a decline from that. And then to have that dollar per square foot to kind of be above where we were in February of 2022, we will still start seeing a gradual increase. Once again, we're not going to see any bold movements for the next 3 to 6 months. We're going to kind of just see with rates the way that they are, that'll probably stay about the same median house price. Now, the only thing that would change that, once again, is if the interest rates drop dramatically.
Yeah, absolutely. So also days on market, we're seeing that come down quite a bit. From December, we're down from 34 days to 28 days. So things are moving a little bit more quickly. I think there is some renewed demand this year. So we're seeing that, as well as the sales price to list price ratio. So we're still seeing homes sell for about 97.9% of their list price. which I think is important for sellers.
And I think it's also important, you know, with having the days on market, when we were in that crazy market in 2022, you didn't have time to think about it. You didn't have time to go back to the house. Right now, you really have time to look at inventory. We're also able to get VA loans through, FHA loans through, and negotiate a little bit on the list price, but really overall our prices that are listed at the right price. So there's only a little bit of negotiation from there.
As far as concessions go, they are kind of tapering off a bit. We finished last year with an average concession around $10,000. We're coming back towards closer to about $9,000, but that's still, so we're still seeing about 45% of all contracts in escrow have concessions in some regard. So whether that's a small concession or all the way up to, you know, 9 or 10,000, we're still seeing about 45% of contracts have those.
And the concessions that we're using, most people are buying down that rate. So if somebody is trying to come in with a VA loan or an FHA loan, they're doing a 2-1 buy down rate. And that's where if you reach out to us, we can really explain that process to you and what that looks like and what your interest rate is going to look like for that first year. And then the second year and what your payment's going to look like. So I would encourage you, if you want more information about that, because you're looking at the interest rates and you're like, there's no way I can afford that. This is where the concessions come into play, and we can walk you through that.
And if you are a buyer who absolutely needs concessions and the only way you can afford a home is if you can buy down that rate, here's a map of some of the cities. I don't know where our map went actually. We had a map of all the cities that, oh, right here.
So there we go.
These cities have at least 65% of contracts with concessions. So you're looking at places like Santan Valley. It's going to be out into the outskirts, but affordability is out there, concessions are out there. So there is, you know, the option to get into a home. You'll just be a little bit further out, but 65% of those contracts have concessions.
Right. And another good point too, especially for when we're looking over at Buckeye, Santan Valley, Coolidge area, even over here in Queen Creek as well, there is still a lot of building. So you're going to have all the new builds, and honestly, we can get you a heck of a deal on some of the new builds with their concessions and their financing. So you can get into a home, maybe have some seller concessions towards your closing costs, in addition getting your rate bought down.
Yeah, a lot of the builders are offering promotional rates right now. We saw it a little bit more in the first month of the year. They're kind of tapering off just a bit, but there are still builders that are offering promotional rates in the 4s and 5s. So
it's exciting.
I know, it's huge. Yeah. It makes a massive difference. So I know that's a lot of information and just kind of a, you know, bird's eye view of what's going on, but obviously you know where to find us if you have additional questions. We, you know, hope to be a resource for you.
Absolutely. We're here to help always.
Thanks for tuning in. We'll talk to you guys next time.
Bye.